This is Stock Retail coming back to you. Earlier today, I was just kind of looking into some analysis, some DD, and I thought, you know what, this is actually pretty worthwhile to share. So, gonna just put this out here for you today. Go through something called price to sales, why that metric is a pretty relevant metric, in my opinion, for AMC, how to kind of look at that, how to use it, and what does it tell us about AMC's valuation. Um, and kind of as always, I'm going to basically kill the FUD out there and give us facts and data to deal with. And I'll give you the links on a couple things too, because you know if you follow this channel, we say kind of no trust me bros around here. Um, Before I get into that, just some exciting news on the movie front. Great weekend for Fast X. Guardians is holding up really well. If you look at something called Legs on that one, it's just holding up. Mario's still cranking. We got Little Mermaid coming out next week. And you know my point of view if you followed me on Twitter or here on YouTube that the amount of movies coming out these next kind of 4 to 6 weeks, really through the end of the quarter, through the end of June, is just phenomenal. And then, of course, that's going to carry all the way through the summer. We're going to talk about that a little bit today. Just kind of the outlook on the industry and how that relates to AMC, and through this sort of more analytic view of this price to sales. So, first off, what even is price to sales? There's a few websites out there. You can kind of just Google research this a little bit. But basically, you just take a company's market cap. So if you don't know, market cap's like take the stock price times all the total shares. Now for us, remember, we got to look at APE and AMC together. So we're going to look at the combined market cap of APE and AMC. And then you divide that by kind of the past 12 months of sales. But I'm also going to give us a forward look on this as well and kind of project us out and think through what happens at our current stock price and what does it imply for the future of AMC's stock price, even if you're not here for the squeeze. People seem to ask me a lot because I talk a lot about fundamentals, whether I believe in the squeeze. Let me just put it right out there. I do. I'm still here for a squeeze. I believe that shorts have overplayed their hand and at some point are going to be pushed out. I believe this is a stock to be long on. These are opinions here that I'm sharing, but it's backed up by a lot of analysis that I continue to share with you guys. The reason I like to lean into fundamentals, I guess one is because that's what I know, but two, it's because I think it really proves how much manipulation there is on this stock. Because if the fundamentals don't match the price, there's some kind of disconnect between the company and its business performance and its stock price. And you start to ask yourself, well, where's that disconnect coming from? And if you follow me, you know that my point of view is that's around manipulation. Um, and let's even say predatory shorting. Okay, so put that out there. You don't have to keep asking me. I believe in the squeeze. Now, no one can predict it. No one knows what that is and when it'll be, but I do believe in that. But even setting that aside, if you're not here for that and you're just interested to learn the fundamentals of a stock, and maybe even here to just learn about this price to sales ratio and how you can think about it in future investments, you'll get plenty of education out of this video today too. So you just take the market cap, you divide by the last 12 months of sales, gives you this price to sales ratio. You can kind of see it's sort of used, especially on we'll get into this more in a minute, but companies that maybe haven't been turning a profit. So like you could look at, like a high tech IPO or something that hasn't turned a profit yet. You might just try to understand what's its stock price and does it make sense. Obviously, AMC, that's going to be pretty relevant. We're going to talk more about that in just a minute. And basically, the lower this ratio, then the more valuable a stock is. It's basically priced at a good value. So that was one website. This here is Investopedia. You kind of could see, and you can see what I've underlined, like when is price to sales useful. So you can see the ratio can be effective in valuing growth stocks. We're going to look at the movie industry and how much it's been growing. And that have yet to turn a profit or maybe have suffered a temporary setback. Well, boy, what does that sound like? If COVID wasn't a setback and thankfully temporary, then I don't know what is. So this perfectly matches AMC. If you just think about basically Investopedia and this other website I was using a minute ago are kind of saying price to sales is sort of an interesting ratio to value a stock when, you heard me maybe last week I did a kind of a teardown pre-earnings for Target. I wanted to just do some DD, and I shared that with you on Twitter. And one of the things I looked at was price to earnings. Well, if a company isn't yet earning, it doesn't have positive earnings, then price to earnings is a funky metric. And so sometimes you might look at price to sales, and you want to ask yourself, is this a company that can turn around? I've done plenty of DD videos and tweets to kind of show you AMC's cash flows, I believe, are turning positive. Frankly, I think they already have been these last, April was the third biggest April ever at the domestic box office, ever. I believe that was a positive cash flow quarter. And then you've got, besides the box office improvement, you've seen the growth in food and beverage sales. You've seen the fact that popcorn is still flying off the shelves, and the credit cards are out. So a lot going on. But just interesting that you can just see this language. This ratio is effective in valuing stocks that have yet to turn a profit or have suffered a temporary setback. That's definitely us. So, all right, are we growing? Well, I'll show you two views I've shown you in some other videos. This is up through, let me hover on this first chart, up through this point where if you're looking, I know some of you have said you listen to me when you're driving, so you might not be looking at this. Actually, please don't look at this if you're driving. Anyway, I'm showing you that I keep track of a rolling 4 quarters of the domestic box office. And so you can see for AMC, the rolling 4 quarters, we just closed, Q1 as far as actuals, and that was actually the biggest. It's just up here, the biggest 4 combined quarters since COVID that we just finished. But you've already seen as well how far ahead Q2 is tracking. So when we finish Q2, look at how much we jump up. And that just continues because all of these quarters, and I told you this like 8 or 9 months ago, that we were going to hit from Q2 on, it's just going to kind of keep being basically the biggest post-COVID quarters that we've kind of ever had. We're going to start having a lot of those because movies are back. We have enough movies starting to be out in the industry. Case in point, we had Mario, followed by Guardians, followed by Fast X. We've got Spider-Man, we've got Little Mermaid, we've got Flash, Transformers, Elemental, Indiana Jones, like all of these, boom, 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 are just coming back to back to back to back. Well, we haven't had that until now. And so we're in what I keep calling the fun part. If you look then also at the domestic box office by day compared to last year. So this line is showing how are we doing versus last year. If we were at 0, we'd be exactly on pace with last year. We can see we're not at 0. We're way up here. So we kind of peaked at almost 750 million we got ahead of last year, but you can see we dipped a little from there. That's basically comparing to Doctor Strange last year. So in some ways, basically Guardians isn't quite as big as Doctor Strange was. But that's fine because I just listed all those other movies that are going to be cranking out. So you're going to see, I'm going to start showing this again soon when it gets more fun to share. Pretty soon here, this is going to start ramping up. I've told you before, I think we'll be somewhere between 800 and 900 million ahead of last year at the box office by the end of this quarter. One more note, a chart I'm not showing you here. I probably should have brought this in. If you just look at AMC's revenue, obviously the box office kind of represents the growth of the industry. And of course, AMC is a movie stock ultimately. So if the movie industry grows, AMC's revenues grow. If I showed you though, I've also got like views of the last 4 quarters of AMC's revenue. And if you look at the last 4 quarters that just finished with Q1, it's also the biggest for AMC, the biggest revenues AMC has had yet. So we are definitely growing. Maybe one more talking point. So this 4 quarters rolling at the domestic box office that we just finished, I want to say that was pretty close to 8 billion. It kind of looks funny here on the way it shows on the graph. But the reason that matters is so if we kind of just broke 8 billion, but what we're about to do for calendar year 23 is we're going to be over 9 billion. So it's just significant growth at the box office. I shared with you recently, there's even a website called thenumbers.com that's a little more of kind of an analytics website in the movie industry. They even are saying they think maybe 10 billion this year at the box office. I'm still not ready to go there yet. I think I've got like 9.2 or something. But boy, I hope they're right. That would be pretty wild. Okay, so clearly the industry is growing, right? So why am I showing you that? Let's go back. The ratio of price to sales can be effective valuing growth stocks that have yet to turn a profit or have suffered temporary setbacks. So we're checking the first box. Are we growing? Well, that's been pretty obvious in the quarter-to-quarter financials that I share with you also. But also you can just see looking forward, it's really obvious in the movies that are coming and even looking right now. So on the left, we're looking forward. On the right chart here, we're looking at right now, where are we at? Clearly, we've been growing. How about price to sales in the movie industry? So we've said, all right, it seems relevant so far. We're kind of establishing that. In the movie industry, you can go out and kind of find, this is one of those websites I was looking at. And again, I'm going to link these at the end. You can see it's basically a 3.7, a 3.68, however you want to call that. But let's call it 3.7. price to sales ratio in the movie industry itself. Um, if you look across different websites, you'll see different numbers. So I'm just kind of showing you one of those. And the reason it matters by industry too is that there is a significant difference. Like if you compared, say, Amazon and AMC, well, they're not in the same business. So you might not value those against each other in terms of a stock valuation. You want to kind of look within an industry, what's the typical stock valuation within that industry? And so if you kind of go Google price to sales by industry, you can find some interesting information yourself. There are some industries where the price to sales ratio is much higher, meaning the stock price is far higher for every $1 of sales that a company has. Then there's some industries where it's actually even much lower. So in other words, the stock price is lower for every dollar of sales. So AMC's at kind of AMC's industry, the movie industry, is kind of at the low end of the price to sales ratio, at that 3.7 basically. So let's take a look and put this together and say, what does this mean to actually AMC's stock price? Is it fairly valued, undervalued, overvalued? Shorty would sure like to tell you they think it's overvalued. And in terms of the reverse split and everything, Shorty likes to come at us and say, oh, it's just going to get shorted back to the ground. Well, if you actually want to value a stock, it would be nice to know where it should be valued, right? And so the idea that they can short something into the ground, I'm going to show you in a minute how that's just an insane idea, especially considering this price to sales ratio. Hold that thought. So the revenue growth I have projected, these are my forecasts for AMC, is in 2023, a 25% growth in revenue, and in 2024, 16% growth. Is that in line at all? Well, let's look. So far, I just showed you those charts about how the box office is growing. So far this year, if you look at year to date on Box Office Mojo, you can see right here, I'm showing it to you. I just grabbed this screenshot, 20 minutes ago, so this is kind of live data. Versus last year, we're growing at a rate of about 30% at the box office. I'm projecting only 25% growth for AMC's revenue, so you can hear that I'm being pretty reasonable. What's more, we've got the popcorn out, we've got the credit cards. There's a lot of things that could drive this number at a better than 25% growth rate for AMC's revenue. But I'm going to keep it there for now. That's what I've got. For 2024, then, I have 16% over that, or you could kind of say a total of 44% over last year. So versus 2022, these are the growth rates that I've got on AMC's revenue, so you know what I'm about to show you and kind of can understand. All right, let's actually dive through this. So, for example, the last 4 quarters for AMC, the sales, so the total revenue, was about $4.1 billion. You can see it's 4.08. So that's an actual number. You can go out to the SEC filings for AMC and spot check that. Fact check me all you want. Okay, so the last 4 quarters, AMC has a little over $4 billion total sales. And the current price, as you can go easily check, as of close Friday, AMC was at 503, APE was at 161. So if you look at the market cap combined for those, that's 4.1 billion basically. So that really puts us at this price to sales ratio of basically 1. In other words, the market cap kind of matches the last 12 months of sales. So for the way you do this ratio, you divide market cap by sales, price to sales, and you get this 1.007 that we're at. Now remember, just a minute ago I showed you that the industry standard is more like 3.7. So to get to 3.7, our price would have to go up 267%. Okay, I'm pausing on that for a reason. If we were to be at an industry standard price to sales, at least according to that website, we would have to almost triple our stock price right now. And we'd be at that industry standard price to sales. So I find that pretty interesting. Now, I want to give a little bit of a, disclaimer to that. I could look probably and find a little more specific information because I looked at the movie industry as a whole, so you might have different ratios for, say, the studios versus the distributors. And so you'd want to put a finer point to that, but I can guarantee you our price to sales at 1.007 is lower than it probably would historically be. All things being equal, setting aside, whether there's stock manipulation and the fact that COVID happened and all that. And you could argue, I like to present a really even-handed approach here on this channel. Obviously, AMC has taken on more debt. That's going to kind of put a discount to its stock price. But we're going to talk in a little bit about how I think a lot of that may get paid off at a significant discount and which would improve AMC's stock price quite a bit. So if you just look at a standard view of a price to sales ratio, which Investopedia told us just a minute ago is a good way to look at a stock if you're in a growth, trajectory. AMC clearly is. Every quarter pretty much has been growing. I think we just had 4 quarters of growth in a row. I'd have to go back and check that actually. 4 quarters of earnings growth we had in a row, not sales growth. But anyway, if you're in kind of a growth trajectory, just showed you how the industry is growing, then price to sales ratio is a good ratio to use. And you can see at this standard, the stock would have to go up a lot just to get back to the standard price to sales ratio. The implied price of that, if you combined AMC and APE together, so remember we've got to look at all shares total to get to the right market cap, that would be $10.34 combined. Right now, I think combined, if you really take the average, it's like $2.80 or something like that. So it's a significant jump that we'd have to do. Like I said, almost tripled. Okay, but remember we said, all right, the movie industry is growing really at a rate of like 30%. Some are saying the year might grow like 35 to 40% by the end of the year. I've got AMC's revenues growing at 25%. That'd get us to $5.1 billion. At the current price, you can see that would put our price to sales at 0.806. So our price to sales ratio would actually be going down, right? Because if the revenue grows but the stock doesn't go up with it, our price to sales ratio is going to start getting even more valuable. Remember, the lower this number, it's kind of like golf or something. The lower this number, the more value there is in a stock. So if the stock didn't move, if these guys kind of kept it pinned with their constant laddering attacks and high frequency trading and all that stuff, our price to sales ratio would start going down. And you'd have some real smart money who would start to say, whoa, there's some real value in this stock. Just to keep the current status quo, the current price to sales ratio, that means AMC's stock over the next year, really over these next 3 quarters, would have to grow 25%. So that's what I'm saying. Like, even if you are not here for a squeeze and you think all of us who think the squeeze is going to happen are just out to lunch, I happen to believe I can make a really solid case it's happening. But we'll set that aside for a second. AMC is primed to grow 25% just on fundamentals. And I'm going to make a case in a minute here that it should be even more than that, and we're going to talk about why in a minute. But at least sales growth is projected at 25%. So just to keep the current price to sales ratio over these next 9 months, the stock would have to go up 25%. I don't know about you, but betting on a stock that looks like just no-brainer, it should go up 25%. That sounds pretty good to me. Now, I'm giving you my forecasts. There's all kinds of reasons I could be wrong. We say here, don't trust me, bro. In no way, shape, or form am I saying this is going to happen. I'm just saying the numbers paint a picture that looks like this would be a logical scenario. Okay, so it's a thesis. That's all this is. I'm sharing with you my thesis that AMC, based on just sales growth alone, the stock should be up 25% over these next 9 months. I mean, that feels pretty good to me. But to get to that standard price to sales ratio then of the industry, the stock price would have to more than triple, 334% growth, which would represent almost $13 a share. So I know I'm going through a lot of math real quick. Rewind, kind of hear this again if you're not keeping track. But mainly, we're just saying at a simple level, as sales grow, as AMC grows towards profitability, it seems like the stock should go up, right? So I'm just showing you the math on that. For 2024 then, I've got AMC's revenue projected at 5.9, almost 6 billion. That's 16% growth over 23, or like I told you, 44% growth from the last year. If the stock didn't go up, if they kept it pinned all the way through the end of 2024, now you're looking at a price to sales ratio of not even 0.7. So you notice that just keeps getting more and more sort of investor friendly. It becomes a higher and higher value. And that ultimately, by the way, is if you think of like a spring that's getting coiled, you can't see me, but I'm like pushing my hands together to squeeze a spring. That to me is what Shorty's been doing with all this aggressive shorting to maintain the stock price and keep it down. While the business is going up, the stock has not been going up. To me, that's a coil that's getting sprung, squeezed, whatever. It's getting primed to spring. And the more you squeeze that thing, and that's why it's called a squeeze too, right? Like the more you press that coil in, the more force it's got ready to go when you let go. So I don't know. To me, that's exciting. There's no promises. I wish I could promise here on this channel. I just cannot. I've been here 2.5 years. I've seen so many weird things with this stock that I make no promises on dates. I make no promises on price. And anybody who does, to be honest, I don't think you should listen to them. But the point is, you can't keep pushing this spring down that much. If we got to a price to sales ratio of zero point 0.7, that would be wild. So the growth then, in order to stay at today's price to sales ratio, so I'm not talking about some big wild thing, I'm just saying how we're valued today. If you kept the way that we're valued today and you kept that in line with this growth in sales, then the stock over the next 7 quarters would need, so in other words, by the end of 2024, it would need to go up 44%. Now, again, in this crazy economy, with all this inflation, banks melting down, lots of stuff going on, bear market, if I saw a stock that I could easily justify a forecast, this forecast growth in sales, I think, is highly, highly justified. And you've seen, some of you, if you've followed me longer, you've seen how right I've been on revenue forecasts for quite a few quarters now. So it doesn't mean I'll always be right. I guess, what do they say? Past performance is no, I don't know, promise of future, whatever. I'm forgetting the phrase right now, but you guys know what I'm saying. So there's no promise I'm going to keep getting it right. But I'd like to think that I've established a pattern of getting it right. So if I'm anywhere near, at least directionally, even if I'm wrong on the exact numbers, directionally it's really obvious this stock should grow a lot over the next year and a half. And then to get to the industry standard price to sales ratio, now you're looking at almost 4 times the current stock price, or the combined like APE and AMC would have to be almost $15 if you smushed them together. Or, that's like 150 plus post reverse split, right? So all I'm demonstrating for you is, if you look at an industry, like a financial industry now, way of viewing stocks that are growing but haven't yet turned profitable, price to sales is just one of many metrics that are used. It's not the end all be all, but it is an indicator of how a stock should be priced within an industry. And that indicator for AMC says it's undervalued. There is another key consideration. Okay, so as AMC sales grow, and this is even more bullish than everything I've told you, AMC has a pretty high fixed cost model. I've kind of demonstrated that in some other videos. If you kind of want to find any videos where I go through a lot of the financials, AMC has a pretty high fixed cost model, because if you think about the debt payments, the deferred rent, sort of the leases, and the current rent, that's kind of their biggest areas of expenses, which are fixed. Just means it doesn't really change. Like, if you have a mortgage payment, that's a fixed cost. Every month you've got that same payment. And if you get a raise in your salary, so let's say in that case that's like your sales going up, but your mortgage payment doesn't go up, you start to keep more of your new money that you're getting. Well, that's a big deal, because translation here, the second bullet, the value of future sales for AMC may actually be higher than in some business models, because AMC has lately been kind of reaching the point where it's going to be kind of covering all its costs. So I've told you, I believe, April was cash flow positive. I believe Q2 as a whole is cash flow positive. Frankly, I believe the entire last 9 months combined of 2023 are cash flow positive for AMC. We'll have to see if I'm right. And I believe that Q2 is bottom line, net income positive, like positive earnings. Well, as you get to that place where your sales have covered your costs, if any of those are fixed costs, they don't go up as you grow your business. Now, future increases in sales, you're actually keeping more and more of that as a percent. And my point being, there's going to come a point where a price to sales ratio isn't going to tell the whole story, because AMC is going to be really driving profitability with each added dollar. And so, these growth projections I'm showing you based on a price to sales metric, I think we could do even better than this. So it's kind of a big deal. Okay, so here's the kind of key takeaways from all of this. So by a price to sales valuation, AMC is undervalued. I'm just looking at the industry standard price to sales, and even if you don't use the one I found, any one you find, we're under that right now. So AMC is a value stock in terms of just a hardcore price to sales ratio. Considering future sales, the growth of this industry, then in my view, from a forward view, and that's where I'm demonstrating for you, if the price didn't go up, this column here, if the price didn't go up, from a forward view, AMC is deeply undervalued. Now you got to think about squeeze considerations on a stock with improving fundamentals? What happens if AMC becomes basically a value stock and is undervalued, and there's people out there in a bear market going, man, where can I put my money that feels a little safer because this is a stock that looks primed to grow? And if that happens, remember, I've talked a lot about access to capital and what good dilution looks like because it adds value to the company and actually makes all the stock go up. If we do grow because of this growth in the industry, the growth of AMC, then this access to capital to pay off debt is actually going to be even cheaper and more value added to AMC. And what's more is, I've demonstrated in a few videos. Maybe look in particular, you can see I'm talking about this one that talks about the pieces. Look for one, it's got like a chess piece or something as the sort of title screen. I talked a lot about how Adam would be able to pay down debt at a discount because banks are so desperate for cash. I talked about that before all these bank meltdowns that you've seen the last few weeks. And so it's kind of looking prophetic in many ways. And I talked about that before he announced that he had just paid off debt at like a 47% discount. So again, it looked fairly prophetic. I'm just telling you, based on macroeconomics, I believe AMC is going to be able to pay down debt at a steep discount, which basically adds more value to our stock, and that they're going to have access to capital at a nice rate. Like it's not going to cost us as much dilution in order for them to pay off that debt. So it's going to be like this double savings, if I'm right. So a lot of really bullish things here. And if you're, not kind of an ape and you're not a squeeze, play investor and you're here for fundamentals, then I know you know what I'm talking about and this is making sense to you. And so I kind of invite non-apes to really be thinking about this as a thesis here, that AMC may be becoming a value stock. All right, so there's the links. I will post those in the comments because this is insane to try to read or write down. I'm not going to ask you to do that. So I'll put those in the comments. Main things, just as a recap. Price to sales is kind of useful for companies that have not yet turned profitable but look like they're going the right way. That is how I feel about AMC. The industry itself is steeply up and to the right, which matches that kind of notion. AMC's price to sales as compared to the industry is well undervalued. You can see these numbers here, the current price to sales at these projected sales and the actuals. And again, if a stock is actually becoming a value play and a squeeze play combined, go look at my video about the end game. And that's why, the people who kind of come to me and say, well, you only talk about fundamentals and whatever, you're misunderstanding me. I believe the fundamentals will cause the squeeze because it becomes really painful to be burning that cost to borrow for the shorts, really painful to have something called opportunity cost because their money is all tied up in this play, and really painful to just sit around waiting while our company is turning profitable. And at some point then, the shorts will exit their positions because they're going to say, dang, I can't accomplish what I wanted to accomplish. I'm going to have to take my licks and move on. So I believe this really relates to the squeeze itself, and I just couldn't be more happy kind of thinking about a very solid standard metric that the financial industry will use to look at a stock, that it is painting AMC as a value stock right at a time when our movies are just going gangbusters. So you want to help us, go see a movie, buy some popcorn, contribute positive energy out there. Let's go.